All right, let's kick off another deep dive. This time, we're taking a close look at Oracle Financial Services Software Limited. You might know them as OFSS,
Yeah, they're a big player, especially if you're a bank looking for software solutions.
for sure. And we've got a pretty comprehensive view for this deep dive,
Hmm.
their official letter to those stock exchanges, a detailed press release, and even their audited financials.
Yeah, we're not just skimming the surface here.
Absolutely not. We're going deep.
hmm
So, first impressions. When you saw these numbers, what jumped out at you?
Well, I gotta say, the performance is kind of all over the place. Their 9-month results, not bad. Revenue's up 8%, operating income climbed 14%, and net income had a decent 5% rise.
Sounds pretty solid.
Yeah, but then you zero in on just the quarter, the last 3 months, and oh boy, it's a different story.
How so?
Revenue took a 6% dip, operating income that really took a hit, down 17%, and net income plunged a whole 27%. Yikes.
Whoa, that's a huge swing. It's like, what happened in those last 3 months?
Right. Makes you wonder.
And, the CFO actually addressed this in their press release. He said their quarterly results, they're not always linear.
Yeah, I saw that.
What do you think he means by that?
Well, a lot of businesses, you see a bit of consistency from quarter to quarter,
Right.
predictable patterns.
Makes sense.
But OFSS, they're different. They're not like, say, a subscription service you renew every month.
I see.
They're tackling these big, complex software implementations, usually for financial institutions.
Makes sense.
These things, they take time. And the way they record revenue, it can be a bit lumpy, depending on when they hit certain milestones in a project.
So if a giant project wraps up in one quarter, the next quarter might look kind of weak, even if things are overall fine.
You got it. But to get why they're up and down like this, we got to dig deeper. Like, where's the bulk of their revenue coming from?
Right, let's get into that.
It's pretty striking, actually. Software products, they rake in 91% of their revenue. Services. A measly 9%.
Wow, 91% from products.
And it's been like that all year.
I mean, if I'm an investor looking at that, I'm thinking, okay, is that a good thing or a red flag? Like, are they too reliant on that one revenue stream?
No, that's the million-dollar question, right? On the one hand, it shows that they get a product people want a lot.
Yeah, a strong product.
But what if the market shifts? Or a competitor comes out of nowhere with some disruptive tech?
Putting all your eggs in one basket kind of thing.
Exactly. Now, don't get me wrong, they're not just sitting on their laurels. Their cloud-based stuff, that's seeing some serious growth.
Oh, interesting.
Yeah, they specifically mention a 20% jump year-to-date for licenses and cloud revenue. And that's right in line with the whole industry shift. Everyone's going cloud for that flexibility.
Okay, so good news on the cloud front. But is it enough to offset the risk of relying so much on those traditional products? What could even mess with their cloud momentum?
Now you're getting to the heart of it. The cloud, it's a big opportunity, but not a sure thing.
Yeah, I see what you mean.
Think about it. The competition in cloud-based financial software, it's fierce. You've got those big tech companies, Amazon, Microsoft, they all want a piece of the pie.
Oh, absolutely. Big players.
And then you've got the regulations, especially in finance. Those are constantly changing. OFSS, they need to stay agile to keep up.
So cloud is great, but they got to keep moving, adapting.
100%. Okay, let's shift gears for a sec. Something else that caught my eye, the geographic breakdown of their revenue.
Oh, yeah, how it's spread out. They're all over the globe.
The U.S., that's their biggest market, consistently about a quarter of their total revenue. But other regions, they're a bit more unpredictable.
Oh, like where?
Well, the Middle East and Africa, that one stood out to me. Their revenue share from that region, it's been bouncing around.
Like how much bouncing around are we talking?
Well, first quarter, they had 23% coming from there. Second quarter, down to 20%. This last quarter, 17%.
That's a pretty big drop.
Right. Makes you think something's going on there. Maybe specific projects ended, new competition popped up, or even just the overall economic or political situation in those countries.
It's a reminder that global business, it's not just about having a good product. You got to understand all these complex markets.
Absolutely. You can't just assume one size fits all.
Speaking of their products, though, I was really interested in those client wins they highlighted.
Yeah, they work with a really diverse range of financial institutions. It's not just those big Wall Street banks we always hear about.
A good sign, right? They're not putting all their eggs in one basket, client-wise either.
Exactly. They mentioned a credit union in the U.S. using their Oracle banking payment system.
It's funny, almost everyone's used a credit union at some point. But you don't always think of them as being on the cutting edge of tech.
Right. But they need these solutions too. And then there's that example of a timeshare company using their F-less XCEB software on the cloud, no less. Timeshares aren't exactly known for being tech-savvy.
So they're reaching all sorts of different clients, which is good. But they're still landing those big fish too, right?
Oh, yeah. They mentioned Piraeus Bank in Greece going live with their Oracle transaction banking platform. And get this, on a multi-cloud setup. That's a pretty complex project.
Piraeus Bank, they're a big deal, right?
Major player. And their choice to go with OFSS, especially on multi-cloud, that says a lot. We're talking complex transactions, high security needs, shows how even the biggest institutions are embracing the cloud these days.
Really makes you wonder what's happening behind the scenes at these companies to make these big digital shifts.
Definitely. It's a whole other story. And that actually brings us to another important part of OFSS, their people.
Right, the human element.
The reports show their employee count dipped slightly from the previous quarter, and their attrition rate is hovering around 10 to 12%, which honestly is pretty standard for the tech industry right now.
Attrition's a big headache for a lot of companies these days. What do you think's driving it at OFSS? Is it just the competitive job market, or is there more to it?
It's a tough one to answer without more info. That tight labor market in tech, it's definitely a factor. Skilled people are in high demand. They've got options.
Yeah, for sure.
But there's other stuff too, right? Company culture, how much they pay, opportunities for growth, even work-life balance, all that plays a role in whether people stick around.
It's a good reminder that financial success, it's not just about numbers. It's about building a company where talented people want to be.
Couldn't agree more. All right, ready for a deep dive into a key financial metric.
Hit me with it.
Days sales outstanding. You probably know it as DSO.
Oh yeah, DSO, I've heard of it.
It's basically how fast a company collects money from their customers. Think of it like lending a friend some cash. If they keep pushing back the repayment date, that's high DSO.
And that's bad because...
It can mess with a company's cash flow.
No.
Now, in OFSS's case, their DSO has been fluctuating between 61 and 76 days throughout the year.
So is that good, bad, or just normal?
Hard to say for sure without seeing industry averages. Lower DSO is usually better, but what's normal depends on the type of business.
Okay, so a bit of a mixed bag with the DSO.
It is. It could be tied to when those big projects wrap up or the payment terms they have with different clients, but it's something to keep an eye on.
Definitely. It's a reminder that even a simple number like that can have a lot of nuance.
Oh, absolutely. Okay, before we wrap this part up, we can't forget the independent auditors.
Right, the folks making sure the numbers are legit.
They're the ones giving us that assurance that the info we're looking at is reliable. And for this, they gave an unmodified review conclusion for both the standalone and consolidated financial statements.
So in plain English, what does that mean?
It's basically a big thumbs up from an independent expert. They've looked over everything and didn't find anything fishy or concerning, like a seal of approval for the accuracy of the numbers.
So we can be pretty confident we're working with good info here. All right, before we move on, let's take a step back. We've been focused on the numbers, but OFSS operates in a pretty regulated and sometimes politicized industry.
Oh, yeah, financial services are always under the microscope.
Exactly. So in part 2, we're going to dive into that political landscape and see how different viewpoints are shaping the conversation around OFSS. Stay tuned for that. Welcome back to our deep dive into Oracle Financial Services software. We dug into their financials in part 1. Now let's switch gears a bit.
Time for some politics.
You got it. We can't ignore the political landscape surrounding a company like OFSS, right? Especially in a field like finance.
It's always there, lurking beneath the surface. The tech they provide, it underpins so many critical systems, banking, lending, payments, the whole shebang. It's no surprise they're under the political microscope.
Right, it's not just numbers on a spreadsheet. So we got a couple of articles here offering different perspectives on OFSS. One leans left, one leans right. Always good to get a balanced view.
Yeah, it's that classic tension, regulation versus free markets. The article from name of left-leaning publication, they're concerned about the power these big financial software companies have, OFSS included. They call them gatekeepers.
Gatekeepers, that's a powerful image.
Right, controlling access to essential financial infrastructure. And they're worried about what that means for consumers, for smaller businesses.
Yeah. What are their specific concerns?
Well, they think this concentration of power could stifle competition, stifle innovation, less choice, potentially higher costs for everyone.
That's a valid point. No one wants to see a monopoly in something as important as financial services. So what do they propose? More regulation.
Exactly. Stronger regulations, more oversight, make sure things are fair, prevent those potential abuses.
More checks and balances, level the playing field.
They also want more transparency. How do these software systems actually work? How are decisions made? Especially for things like loan approvals, credit scoring, all that.
Yeah, make sure the system works for everyone, not just the big guys. Okay, that's the left-leaning view. Now, let's see what the other side has to say. The article from name of right-leaning publication, they paint a very different picture.
Oh yeah, night and day. They see OFSS as a success story. Free market capitalism at its best. Providing efficient, reliable solutions, everyone benefits.
So less government, more market forces.
Exactly. They say too much regulation would stifle growth, stifle innovation, harm everyone in the long run. They believe OFSS is successful because they meet the needs of financial institutions and consumers within a competitive market.
Two very different philosophies. So where do these articles really clash? What are the big sticking points?
Data privacy is a big one, the left-leaning article. They're really worried about all that sensitive financial data OFSS handles. They want stricter measures to protect it.
Makes sense. Data breaches, identity theft. It's a real concern these days. What kind of safeguards are they proposing?
Robust encryption, strict access controls, clear rules on how data can be used and shared. And they want individuals to have more control over their own data, know what's being collected, how it's being used.
More transparency and accountability. Okay, so how does the right-leaning article counter that?
They basically say OFSS already has strong security. More regulations are just a burden, unnecessary. They believe the market itself will force companies like OFSS to prioritize data security.
Because a data breach would hurt their reputation, cost them customers.
Exactly. The free market as a self-regulating force. Now, another point of contention is algorithmic bias.
Ooh, that sounds like something out of a sci-fi movie.
Right. But it's a real concern. The left-leaning article points out that the algorithms OFSS uses, they could perpetuate existing inequalities.
Wait, how does that work?
Well, think about how algorithms are used for things like loans, credit scores. They're based on tons of data. If that data reflects societal biases, the algorithm might unintentionally make biased decisions.
So even if no one's intentionally discriminating, the algorithm could be disadvantaging certain groups based on race, gender, all that.
That's the fear. The left-leaning article wants those algorithms scrutinized, make sure they're fair, don't discriminate against anyone.
And what's the other side's take on that?
They downplay the risk. They say OFSS's software is objective, data-driven, using relevant data to make sound decisions. They think fears about algorithmic bias are overblown.
So trusting the data, trusting OFSS to do the right thing, tough issue. A lot for our listeners to think about. How do you think they should approach these conflicting viewpoints?
Be critical. Don't just take one side at face value. Look at the evidence they present. Consider their biases. Try to find some independent research, some analysis that sheds more light on the issue.
Don't just accept what you read. Dig a little deeper.
Exactly. And remember, these aren't just abstract debates. These political viewpoints have real-world consequences.
It could shape laws, regulations.
Absolutely. Stricter data privacy laws could cost OFSS more to comply. A hands-off approach could give them more freedom to innovate, expand.
So it's not just about OFSS. It's about how we, as a society, decide to handle these powerful technologies that affect our financial lives.
It's a much bigger conversation. The role of technology, how we balance innovation with ethics, consumer protection, fairness.
Big questions. And before we wrap up this part, there's one more layer we got to consider. We've been talking about OFSS is this independent entity, but they're actually a subsidiary.
Oh yeah, they're owned by Oracle, a tech giant in its own right.
And Oracle, they've got their own culture, their own political influence. That undoubtedly affects OFSS. So in part 3, we'll zoom out even further, see how Oracle's actions and philosophies might be shaping OFSS's path. Stay tuned.
Welcome back for the final part of our deep dive into Oracle Financial Services software. We've covered their financials, the political landscape, and now it's time to zoom out even further.
Yeah, we're going full macro here.
Exactly. We need to talk about Oracle. OFSS's parent company. They're a tech giant themselves, so their actions, their whole philosophy, it all trickles down to their subsidiaries, right?
It's like those nature documentaries. You see a baby elephant, adorable little thing, but you got to understand the whole herd, the dynamics, to really get what's going on.
Love that analogy. So first things first, how healthy is Oracle financially? Are they a solid, stable parent company, the kind that gives OFSS a strong foundation?
Oh, no doubt about it. Oracle is a financial behemoth, one
Yeah.
of the biggest software companies out there, and their financials, they're usually rock solid. Diverse portfolio, they have been killing it with the cloud transition.
Okay, so that's good news, right? OFSS is in good hands, smooth sailing from here.
Well, hold on a sec.
Mhm.
Oracle might be financially strong, but they've also got a reputation for being a bit, shall we say, assertive.
Assertive, what does that mean in the corporate world?
Think profits first, shareholder value above all else. They've had their fair share of legal battles, faced some criticism for their sales tactics, not exactly known for being cuddly. Okay, not your typical warm and fuzzy parent company, so how might that affect OFSS?
It's definitely something to consider. Oracle could push OFSS to hit those aggressive targets, even if it means taking risks or, cutting corners.
Yeah, pressure from the top.
And they might prioritize certain products, certain markets, even if it doesn't really fit with OFSS's long-term goals.
So, guidance and support, sure, but maybe some pressure to fit the mold. Now, another big factor with big corporations is political lobbying. How active is Oracle in that arena?
Oh, Oracle's a major player in Washington and globally. They spend millions lobbying on all sorts of issues, taxes, data privacy, government contracts. They know how to work the system.
Trying to shape the rules of the game, not just play by them. How could that impact OFSS?
Well, anything related to financial services could be relevant. Say there's a push for stricter data privacy laws. Oracle might lobby to weaken them, ease the burden on OFSS.
Makes sense. Less regulation usually means lower costs for companies.
Right. Or they might push for government contracts that give OFSS an edge over competitors.
So, Oracle's political moves could create opportunities for OFSS, but also expose them to risks if things backfire. It's a delicate balance. What's the big takeaway for our listeners here?
I think it's crucial to remember that a company's political activity is part of their strategy.
Yeah.
There's nothing inherently wrong with lobbying, but you got to be aware of how it might be tilting the playing field.
Like understanding the currents beneath the surface.
Right.
Things might look calm, but there are powerful forces at play.
Exactly. And that brings us to the end of our deep dive into Oracle Financial Services software. We've explored their performance, the politics, the influence of their parent company. It's been quite a journey.
Absolutely. And I think the biggest takeaway is that understanding a company like OFSS, it requires a holistic view. You can't just look at the numbers. You got to understand the context, the bigger picture.
Couldn't agree more. Politics, corporate culture, technological shifts, it all plays a role.
It's like piecing together a puzzle, right?
Yeah.
You need all the pieces to see the whole picture. Well, folks, that wraps up our deep dive for today. We hope you found it insightful.
Thanks for joining us.
And until next time, keep diving deep.